Hello, what's up, guys? Welcome back to Zodiac Trading. So today in this episode, I'm going to cover a little bit of Japanese insurer because right now my radar kind of detects some of the anomaly right now. Some of the big guys, big financial institutions are now actually changing their key investing strategy. So I think to myself that would be a good information to share to everyone who subscribe my channel. If you guys, I strongly encourage you guys to join my Patreon. In that sense, you can support me, and in the same time, you will actually learn a lot more and in depth of how macroeconomics actually work in real life and how you be able to adapt that knowledge into real life trading. So let's just move on. So today I was, reading this article. I will read tons of article every single day, and I would try to actually get the most important messages out of these articles and share my opinion with you guys. So today, as I was reading I was reading the title of this article that Japan's insurers plan to sell foreign debt flashes market warning. So I believe would be a very important signal because once you see the insurance or the big financial institutions when they are trying to change their investing strategy or they are trying to get rid of their old position or maybe adding their new position, that means the market might gonna that means they actually view the market is the paradigm is going to shift uh, from their opinion that they believe there will be a major market paradigm shift in the financial market. So right now, what they're doing is there are several Japanese insurers selling their foreign debt, and at the same time, they're adding their positions purchasing Japanese bonds. We're talking about the long-term bonds. And actually, the reason why they do that is because they are actually witnessing we are reaching to an end of this rate high cycle, and that they believe the Fed is going to have a rate cut very soon. So that's why they are kind of offload all of their foreign currency hedge, and at the same time their offshore bonds. Interestingly, they are also long Japanese bonds. That means that they are going to be more positive of Japanese assets, how Japanese asset would perform. And by doing that, they're also expressing the view that they believe Bank of Japan is going to be out of that YCC framework somewhere around this year. So the Bank of Japan has this strange tradition that they don't like to be outrun by the traders. So every time when Bank of Japan implementing some new things or maybe a new monetary policy thing, they always keep silent and they always keep the market speculators from guessing. So I believe this time will be the same thing. They will probably change the entire YCC framework somewhere near the end of this year. And I strongly suspect market participants will actually acknowledge that. So that could be a good and a golden trading opportunity. And if you want to know that kind of information, you can join my group, and I'll be happy to share that information to you guys. And also, I believe it is uh, it is this is how the financial institutions express their opinion towards the monetary framework. Because as an insurance company or large financial institutions, they have huge amount of money. So that means they are going to it's not that easy to just offload their assets. Okay, so every time if they plan to change the allocation, their chief officers they have to spend a lot of time researching. They need to have a lot of market data in order to make that decision. So right now we're seeing this. And also, I believe that for Abby's economic framework, that kind of deflationary thing, it's what stops the Japanese economy from thriving. we are probably going to see that end by this year or the beginning of next year. Reason why, because Warren Buffett last week, somewhere last week, he was adding his risk exposure, and he was trying to long more Japanese assets. And the Berkshire Hathaway was adding more risk positions in Japanese equity market. Actually, and also he's longing some Japanese bonds as well, because that he can see it's a good opportunity, because finally the Bank of Japan is going to have a major monetary policy shift, and they are going to get rid of YCC control, and they are going to they have accomplished the task of fighting this deflationary economic scenario. And right now, the Bank of Japan must focus on maintaining that 2 to 3% of inflation rate, in the same time to finally give some real inflation to the market. So in the next episode, I will explain why Japan is such a deflationary economy system, and why Japanese youngsters, they are very upset with their economic system. And that's partly to blame for the Abe economic framework, because Japan, in order to save its economy from collapsing, the Japanese economy system was basically in this deflationary abyss. So that means a lot of people are reluctant to spend money. People prefer to save money instead of spend more money. So as a result, matter of fact, the companies stop to raise their salary, and at the same time, Japanese employees have to work for longer hours, and that is very exhausting for a lot of Japanese people. And right now, with Japanese yen in a very low level, that actually makes the young man today in Japanese society complains a lot, because obviously they are not making enough money for their family, and because of the weak yen, when they go abroad, they spend more money. So that would be a bad thing for the Japanese economy system. So in today's episode, I share my perspective and view on the Japanese insurance company, how they are shifting their investing strategy, and from my opinion, what I see in that financial decision, and there will be some opportunity, and at the same time, we should view this as a major market warning. So thank you guys for watching this episode. Please click the like button, and please subscribe and share to your friends if I add value to your life. And I will see you in the next episode.